Hello, today is Saturday, June 13th, 2026. Here is your daily signal. According to Fortune, Gulf states are aggressively ramping up their investments in artificial intelligence, solidifying their position at the forefront of the global AI race. Since 2022, countries like Saudi Arabia, the UAE, and Qatar have markedly increased their allocation to AI projects, in large part to diversify their oil-dependent economies. Sovereign wealth funds in the Gulf, including Mubadala in Abu Dhabi, Saudi Arabia's Public Investment Fund, and Qatar Investment Authority, now hold trillions of dollars and are central to worldwide tech investment. These efforts align with long-term strategies such as Saudi Vision 2030 and the UAE's National AI Strategy, with Crown Prince Mohammed bin Salman and Mohammed bin Zayed driving policy. Fortune reports that Saudi Arabia's PIF just committed an additional $30 billion to tech ventures, while the upcoming SpaceX IPO is expected to deliver sizable windfalls to Gulf investors, fueling even more capital for AI development. Near term, these moves will accelerate local economies away from hydrocarbons, prompting rapid upskilling of the regional workforce and attracting global talent to Gulf cities. Medium term, rising Gulf ownership in Western and Asian technology firms could shift the balance of global regulatory influence, with competition possibly sparking both innovation and the risk of asset bubbles in digital sectors. Next, let's turn to the latest in the U.S. healthcare industry. Business Insider highlights that the FDA has approved its first new sunscreen ingredient in decades, aiming to close the gap between U.S. products and popular European and Asian formulas, while the Associated Press brings attention to the FDA accepting Takda's application for intravenous Entyvio vedolizumab in pediatric ulcerative colitis and Crohn's disease. The U.S. Food and Drug Administration plays a crucial role in shaping the healthcare landscape, approving new drugs and ingredients that influence access and public health outcomes. Lately, FDA decisions have faced growing scrutiny regarding safety, effectiveness, and how quickly approvals are granted compared to international authorities. Takeda Pharmaceuticals recently submitted an application for Entyvio, targeting young patients with inflammatory bowel diseases, and the FDA has approved bimetrozole for use in sunscreens, a move expected to make U.S. products more globally competitive. On June 10, the FDA accepted Takda's Entyvio application, offering hope for pediatric patients awaiting new therapies. On June 9, the FDA greenlit bimetrozole, which has been widely used abroad but only now enters the U.S. market. These decisions could mean improved treatments for children and more effective sunscreens, while they reignite debates about the speed and rigor of American regulatory processes. Pharmaceutical firms may see this as encouragement for faster innovation and submission of new therapies, with potential shifts in both patient access and industry competition. Now, let's move forward to developments in venture capital investing. TechCrunch reports that Justin Earnest, founder of Sabertooth VC, invested nearly $400 million into high-profile startups like Anthropic, Anduril, and SpaceX without following the traditional venture capital playbook. Sabertooth VC represents a departure from the standard model, where fund operators typically spend long periods raising capital and navigating regulatory channels. Instead, Earnest built a captive network of limited partners LPs, enabling swift, syndicate-based investments. This model bypasses conventional fundraising and compliance cycles, as private investors directly participate in deals, allowing Sabertooth VC to back high-growth companies quickly and flexibly. On June 9, TechCrunch confirmed that nearly $400 million in funding was deployed by Earnest through these rapid syndicate deals, involving major startups in Silicon Valley and beyond. The immediacy and scale of this approach may encourage more venture operators to adopt similar syndicate models, pressuring legacy VC firms to innovate. Short-term, startups could see accelerated fundraising and smoother capital deployment, while medium-term, increased LP participation and deal flow could reset power dynamics in early-stage tech investing. If widespread, this trend may invite more regulatory scrutiny around investor protections and transparency as deal sizes and frequencies continue to grow. Now, onto the markets. European equities posted modest gains, with Spain showing the strongest momentum as the EWP rose 6.3% day-over-day and 4% month-over-month. Among top movers, Spain's EWP led international ETFs with the highest daily and monthly growth, while China's FXI lagged international peers despite a slight daily uptick of 1.1%. Commodities were mostly lower. Gold edged up just 0.06% but is negative for the month. The sharpest monthly drop came in silver, down more than 22%, with SLV advancing 0.8% today. SLV held as the top gainer while platinum's PPLT was the day's worst performer, falling 0.58%. Technology favorites were mixed. AMD rose 4.7% on strong momentum, while ADB posted a daily decline of 6.7%. The standout winner was ARM, surging over 11% day-over-day and more than 72% month-over-month, while MU pulled back 1.4% today despite robust monthly gains. In broad sectors, semiconductors climbed as stocks jumped nearly 16% day-over-day and 13% for the month. Transport stocks also rallied, with XTN up 6.4% today and 17% month-over-month, while ITA dropped almost 1% today. Gainers were led by SPCX, up 145 points or nearly 660%, with SHU, Graph.ws, and IDA following, while CPOP fell 81% and ORGMA dropped 71%. That's it for today. You can find more news and details on our website. Goodbye.